Welcome to the Daily AI News Digest. I'm your host, and today is Friday, June 19th, 2026. This explainer is brought to you by bestai.org. Today, we're zeroing in on the actual market realities redefining the intelligence economy. We're seeing a very distinct, measurable pivot away from pure generative software experimentation and moving heavily toward agentic physical infrastructure integration. We're going to cut right through the noise today. We'll look at the capital flows, the cold technical benchmarks, and the geopolitical shifts that are actively driving this transition. So here's how we're breaking it down. First, the biggest moves today in the markets. Then, we'll look at product and model realities, followed by regulation, policy, and business signals. And finally, we'll wrap up with the analyst's take. Let's look at the top macro events shaping the market right now. We've got confidential S-1 filings setting the stage for some historic public offerings from both OpenAI and Anthropic. On the hardware front, NVIDIA just reported a record Q1 revenue of $81.6 billion. Over in Europe, negotiators reached a provisional agreement on the EU AI Act Omnibus. And finally, the US and Japan have formalized a $1 billion research collaboration called the Genesis Mission. All right, let's dive into our first section, the biggest moves today, specifically looking at capital and infrastructure. Now, OpenAI has officially filed a confidential S-1 with the SEC, and they are targeting a massive $1.75 trillion valuation. Keep in mind, this follows a private valuation of $855 billion just earlier this March. But when you look under the hood, the financials show some incredibly steep capital requirements. The filing indicates projected losses of $14 billion for the current year alone, and they're not expecting to see profitability until 2029, or maybe even 2030. On top of that, institutional investors are taking a really hard look at their corporate structure, where the nonprofit parent entity still retains 26% ownership and holds significant board control. To really understand the current market dynamics, we need to contrast OpenAI with Anthropic. It perfectly highlights the divide in corporate strategies right now. Anthropic recently closed a funding round that puts its post-money valuation at $965 billion, which actually surpasses OpenAI's last private valuation. But here is the critical difference. Anthropic is clearly shifting towards sustainable growth. They are projecting their first-ever operating profit of approximately $559 million for Q2 of 2026. So for the public markets, this presents a clear, profitable alternative compared to OpenAI's ongoing capital burn. Over on the infrastructure side, the capital flows remain highly concentrated. NVIDIA just reported a staggering Q1 fiscal 2027 revenue of $81.6 billion. That is an 85% increase year over year, and data center revenue alone made up $75.2 billion of that total. Because of the strong secular growth and massive cash flow generation, S&P Global Ratings actually upgraded NVIDIA's credit rating to AA. At the same time, the company's board authorized an additional $80 billion in share repurchases. That's a very clear signal of their confidence in sustained infrastructure demand. Moving on to Section 2. Let's look at the product and model realities, specifically focusing on technical benchmarks. So, Google DeepMind just introduced an experimental model called Diffusion Gemma. The thing to pay attention to here is the architecture shift. You see standard autoregressive models generate text sequentially, one word after another. But Diffusion Gemma is a 26 billion parameter text diffusion model, which means it generates entire 256 token blocks simultaneously. Now, yes, this does sacrifice some output quality compared to the standard models, but the trade-off is speed. It achieves up to 4 times faster inference, hitting over 1,000 tokens per second on a single NVIDIA H100 GPU. It's optimized strictly for speed-critical workflows like inline code editing. For the developers out there, this really signals a strategic shift towards specialized, lower latency models rather than just relying on broad reasoning engines. Now, for a grounded, realistic look at autonomous agent capabilities, we have some new data from Mitra. They're a research nonprofit that measures AI task completion time horizons, basically how long an AI agent can reliably complete expert-level software tasks. Their latest benchmark data shows that a GPT-5 agent has a 50% success rate on tasks that would typically take a human expert 2 hours and 17 minutes to complete. However, the data also clearly shows that for tasks requiring beyond 16 hours of human effort, current frontier models are still unreliable. That is the cold technical reality of where agentic capabilities actually stand today. Let's pivot to Section 3, Regulation, Policy, and Business Signals, focusing on global shifts. Over in Europe, negotiators have hammered out a provisional agreement on the digital omnibus. And what this does is introduce some very pragmatic compliance delays to the EU AI Act.
General enforcement is still set to begin in August 2026, but high-risk systems are getting some timeline relief. Obligations for Annex 3 use-based high-risk systems are being deferred by 16 months, pushing that to December 2027. And Annex I product-regulated systems, those are delayed by a full year to August 2028. This is largely to give EU standard-setting bodies the time they actually need to prepare the testing and documentation guidelines required for companies to comply.
Looking globally, nations are actively securing compute capacity through massive state-level investments. The U.S. Department of Energy and Japan just announced the Genesis mission. This is a $1 billion research collaboration uniting 11 joint teams across national labs. The goal here is to advance AI-driven scientific research in highly specialized fields like quantum computing and nuclear fusion. Now contrast that targeted scientific approach with the United Arab Emirates. The UAE is building Stargate. This is a massive $30 billion, 1 gigawatt AI compute cluster in Abu Dhabi, built in partnership with entities like G42, Microsoft, and NVIDIA. But we have to look at the severe business risks involved with a build-out of that scale. AI facilities in the Middle East are obviously operating in a highly volatile geopolitical region. Recently, Iranian drone strikes have directly targeted data centers in that area. As a direct consequence, Amazon Web Services had to report that multiple services in its UAE region were forced to run entirely on backup power. The conflict caused significant grid instability. Make no mistake, this physical vulnerability is a critical risk factor for global AI infrastructure right now. Meanwhile, we're seeing an interesting long-term strategic play from Nigeria. Minister Boson Tijani recently launched the vision for a national AI trust. This is designed as an independent body to provide sustainable stewardship of AI development, keeping it insulated from standard political cycles. But crucially, this governance framework is being paired with hard, physical infrastructure. It's called Project Bridge. It's a $2 billion initiative to lay 90,000 kilometers of fiber optic cable across the entire country, which lays the necessary physical foundation for local AI adoption and investment. That brings us to Section 4, the analyst's take, where we look at the physical economy. If we cut through the marketing noise, the overarching theme of today's digest is a fundamental market pivot. The industry has firmly moved past the phase of generative software experimentation. As noted by industry analysts, the intelligence commodity is no longer defined just by the capacity to generate text. Instead, it is now defined by the ability of autonomous systems to actually plan, optimize, and execute within physical and digital environments. The distribution of focus in this new intelligence economy perfectly illustrates this shift in capital allocation. We are now seeing focus split quite evenly, 40% on data centers, 40% on securing energy grids, and 20% on physical security. The massive financial reallocations we've looked at today prove one thing. The bottlenecks of the AI industry are firmly physical. Data centers, energy grids, and physical security, these are the true hard constraints on the scale of the intelligence economy. Which leads us to the critical question that institutional investors are evaluating today. Can valuations like OpenAI's $1.75 trillion target survive public market scrutiny when the underlying physical infrastructure required to run these models remains so vulnerable to severe regional grid risks and power constraints? It's a sobering reality, but it's the reality the market has to price in. Thank you for joining us for this explainer, brought to you by bestai.org. I'm your host, and we'll continue to monitor these developments with strict objectivity. See you next time.